Hello, today we have the opportunity at the Mining Journalist Select event in London to speak with Brad. Brad, what are you doing?
Well, we're in the gold and silver royalty business. We've been around for 6.5 years. We've had one very clear and concise strategy, and that was to give our shareholders exposure to the highest quality assets on the most proven geological trends that are being advanced by the largest mining companies in the world. And we've done that through an industry-leading 31 transactions. And through those transactions, we've acquired 85 royalties. We've deployed approximately around $170 million US. We've got just an incredible portfolio of production, development, and exploration royalties today.
What jurisdiction are you focused on?
We focus on the safest jurisdictions. I mean, this day and age, there's never been a time to be in safer jurisdictions. The whole world, globalization is reversing, breaking up into quadrants, and the majority of our assets are in North America and South America, within those jurisdictions, across the most proven geological trends in those jurisdictions, which is absolutely critical for a royalty company, because it's these structures, it's these proven geological structures that continue to produce some of the largest gold mines in the world. And so in the royalty business, we really want to focus and build our portfolios, around those positions within these big mining companies' portfolios.
So gold coins and gold bars are basically the only currency in the world. The rest is paper. And what we can see currently is a big demand in those items, physical items, but there's still not a lot of demand in the shares of gold companies like it has been 3 years ago. Yeah. So do you have an explanation for that?
Well, I think that there's a number of different reasons for that underperformance. But what I can say is that owning a royalty company is the closest thing you can own as compared to physical. But you get the expansion. The gold mining companies continue to find more gold for you. So instead of owning an ETF like GLD, where you pay 40 basis points, a lot of the mining companies are increasing the reserves by 10, 15, 20% a year at no cost. Royalties are free carried. That's one of the amazing things about them. And they go on into perpetuity. So owning a royalty company that has a royalty over a very significant asset in a safe jurisdiction, the margins on that are, depending on the type of royalty, but the margins on that are close to as 100% as you can get. And so you get the inflation protection that typically you don't get within the mining sector. Within the mining sector, even in a rising gold price environment, the costs are typically always not too far behind. And the leverage you get from the royalty portfolio on the growth from the mining companies finding more ounces, and then the 100% margin, protection against inflation, the contractual rights and interests with the asset are by far the safest part of the capital structure. So it's truly just an amazing asset. We've got 85 of them, which diversifies us across pretty much almost all of the largest gold mining companies and base metal companies across the world. We've got gold kind of components within the base metal company side. And again, the safest jurisdiction. So from a risk-adjusted standpoint, it's an incredibly compelling opportunity. And today, you can buy Metalla royalty. We trade on the New York Stock Exchange under the symbol MTA, and also in Canada under the symbol MTA on the TSX Venture Exchange. You can buy Metalla at half of our historic net asset value and our multiple. So it's an incredible opportunity to capitalize on. Obviously, it looks like gold potentially might move this year with the banking crisis and people, afraid of holding their cash in the bank, and the central banks continuing to buy gold at record rates. So as this moves through, companies like Metalla will be an incredibly risk-adjusted way to play them.
So this sounds all very exciting, and I think a lot of gold fans will love your statement. Can you tell us a little bit more about your share structure and the balance sheet?
Yeah, the balance sheet and the share structure are incredibly clean. We've got 50 million shares outstanding. We've got no warrants. We've got 4 or 5 very significant shareholders, but all under 10% in regards to their ownership. Very little debt. compared to our assets, roughly about 3%. So clean balance sheet, clean share structure, strong supportive shareholders. We're in 4 different ETFs. We trade $2 to $3 million a day. So it's a great high growth, again, a high growth, risk adjusted way to get a lot of leverage to the gold price without much risk.
That sounds very good. Thank you.
Okay.